Hello everyone. Welcome back to my channel. Iraq is a country rich in assets, far beyond what many might realize. While most people think of Iraq in terms of its oil wealth, there's so much more that contributes to its economy. According to Newshound Guru Militia Man, the nation's assets are filthy in terms of their abundance. This isn't just a casual observation, it's a reflection of the vast natural resources that Iraq possesses, many of which go beyond the scope of oil. When we talk about Iraq's economic potential, we have to remember that oil is just one part of the equation. There are several non-oil sources of income that, when fully leveraged, could significantly boost the nation's economy. Historically, Iraq's exchange rate has been heavily tied to oil prices. For instance, the original exchange rate of 3.22 cents per dinar was primarily based on oil revenue. But now, Iraq is looking to diversify its revenue streams, which could lead to a reevaluation of its currency's value. When economists and government officials work to determine Iraq's real effective exchange rate, REER, they look beyond just oil. In fact, a large part of Iraq's future economic strategy will likely depend on non-oil revenue sources such as taxes at border crossings, income from phone bills, electronics, and other sales taxes. These are sources of income that have often been overlooked or underappreciated in the past, but they hold significant potential for the nation's economy. Taxes at border crossings, for example, represent a massive opportunity for revenue generation. Iraq is strategically located with several borders shared with countries like Iran, Syria, Jordan, Turkey, and Kuwait. Goods flow in and out of the country, and the taxation of this movement is a key revenue source that has yet to be fully maximized. As Iraq strengthens its infrastructure and enhances border security, this type of income will likely become more reliable and substantial. Beyond border taxes, there's also income from telecommunications and other sectors. In today's digital age, phone bills, internet services, and other forms of electronic communication are essential to modern life. These are consistent sources of revenue that can be taxed and used to build a steady income stream for the government. Similarly, sales tax on electronics and other consumer goods is another area where the government can generate significant non-oil income. The potential income from non-oil sources, combined with Iraq's natural resources like minerals, agriculture, and tourism, creates a more holistic picture of the country's wealth. When these various streams of income are properly accounted for in determining Iraq's real effective exchange rate, the country could see a substantial change in the value of its currency. For now, the exchange rate has remained relatively static, tied primarily to oil. However, as Iraq continues to diversify its economy and tap into these non-oil resources, the possibility of a currency revaluation becomes more realistic. This diversification is crucial for Iraq's future. The country is working hard to break away from the dependency on oil, which is subject to volatile price fluctuations. By building a more balanced and diversified economy, Iraq is setting the stage for long-term financial stability. So, when we hear about a potential shift in the exchange rate, it's not just about oil anymore. The government is now considering all the non-oil assets and revenue streams that could support a stronger, more effective currency value.